Welcome back to the Dividend Diplomats YouTube channel. You got Lanny and Bert. You know it by now. Guys, what are we talking about today in this video? You know what? On Tuesday's video, we talked about Intel and how bad their earnings were. It had some pretty negative vibes to it. Today, we're going in the other direction. We're going to talk about two big oil companies that blew their earnings out of the water, and we're going to put them head to head in the Dividend Diplomats Dividend Stock Screener to see how they compare metric by metric down the line.
Exactly, guys. But before we dive in, smash that subscribe button. Give these diplomats a thumbs up, guys. We are on the road, the journey to 16,000 subscribers. We're about 300 away, so help us get there. Let's make some noise on this video. But as Bert said, we're bringing some positive momentum here. Positive earnings, positive growth, record earnings, record growth. Bert's favorite liquid that he drinks. He drinks that big oil, baby. He's got that barrel he's sitting on right now recording this video. But we're diving into some oil stocks, aren't we?
Yes, we are. And we're not just talking about any ordinary oil stock. We're talking about the two goats of the sector, the two dividend aristocrats of the sector. ExxonMobil, ticker symbol XOM, and Chevron, ticker symbol CVX. Not to be confused with DX, we're talking CVX.
Yeah. All right, guys, diving in because they have crushed earnings. We're talking record profits. I mean, Q4 sales alone were just off the charts. You know, I know Chevron cranked out 55 billion in revenue. You know, I'm pretty sure Exxon was just about at 100 billion in revenue in one quarter alone.
Guys, this is one quarter. This is Q4. Year-to-date revenue for each of these companies. Chevron, 23. I'm blown away by this. 235.7 billion was their year-to-date revenue. Then Exxon was like, hold my beer. Our year-to-date sales were 413 billion with a B.
Not too shabby. And, you know, with that,
just a few bips,
you know, stocks are doing pretty well. Last 52 weeks, you know, Exxon's up a cool 43%. Chevron's up a cool 29%. So congrats to all the buyers during the pandemic when oil was zero or negative for the flash time period. If you guys were scooping up oil, you're definitely, I don't know, relishing in the victories here. And hey, future earnings looks pretty good too, you know, Bert.
I know. And I mean, let's be real. Should anybody really be surprised that oil companies are delivering these kind of results and you're seeing this kind of growth? Just think about our gas tanks. Think of how much the price per barrel has gone up. Of course, it's going to translate to top line revenue. You shouldn't be shocked at all to see record growth in revenue and record earnings for each one of these companies. I mean, let's go back to those revenue figures. Year-to-date revenue for Chevron was 235. We said it's up from 155 billion the year before. Exxon, year-to-date revenue was 413 billion. That was up from 55.7. So the revenue growth, the earnings growth matches that share price growth that Lanny was talking about. And it, again, shouldn't surprise a person.
When it burns, it grows. But guys, there was some big stock buyback news, some big dividend news for one particular company here. And you know what we're going to do today? We're going to talk about a little bit about the performance, but we're also going to dive into the Diplomat Stock Screener focused on those three metrics: that price to earnings ratio less than the S&P 500. And since you're talking about two, to see which one's less than the other. Dividend payout ratio less than 60%, preferably in that sweet spot of 40 to 60%, and the history of growing dividends and the dividend growth rate. But Bert loves that dividend yield as that cherry on top. Bert, we are diving into two big oil stocks here. What do you want to do?
Let's jump right in here. I think we should go metric by metric here, since we're just going to talk about the two of them. Because remember, we want to see how the two top in the sector are. But overall, we're going head to head. But we also want to see how are the two companies looking independently too. Maybe they're both stock to buys. Maybe one's better. That's what we're going to find out, or neither. Let's find this out here. So let's look at that first metric here. That price to earnings ratio. Chevron, their closing price today, January 31st, the final day of January. Closing price 174.02, EPS 14.66, PE ratio 11.87.
Not too shabby. Looking at Exxon, ticker symbol XLM, stock price is 116.01. Forward earnings for 2023 is looking like $10.64. So that price to earnings ratio is actually lower than Chevron's at 10.90.
All right, let's move into the dividend payout ratio. We'll come back to the full analysis after for each of the companies. Payout ratio, Chevron, after their increase, which we'll get to in a second, their new dividend is $6.04 to payout ratio of 41%.
Whoa, that's a sweet spot, Bert.
Right in the bottom end of it. So how does that compare to Exxon? Annual dividend, 364. Divide that by the 1064 of earnings, a low payout ratio, 34.21%.
Who would have thought Exxon would be on the safer side of their payout ratio right now versus Chevron?
Yeah, wasn't it just a year ago when we were looking at Exxon and their payout ratio was like 75%? Like, are they going to grow their
It was high.
It flipped that fast.
But the reason why it flipped that fast is because, guys, let's look at that dividend growth rate right now. 5-year on average for Chevron. They've been doing it for 35 years at a higher rate at 5.63%. And Bert, what did they just announce the other day?
6.3% dividend increase. So a pretty solid dividend increase, to say the least. We featured them in our recent video where we talked about the 8 recent dividend increases that came around. Exxon, on the other hand, 5-year dividend growth rate's 3.04%. They've increased that dividend for 40 years. We know about the frustrating tale of ExxonMobil and how they barely hung on to that dividend aristocrat status last year. We didn't think they were going to make it, but in the last quarter they could. They announced a 3.4% dividend increase at the end of October for that December dividend payment to keep that aristocrat status.
Hey, they used the tools that they were given, and they were able to extend that streak based on a sheer technicality of the dividends being paid. So you got to give them props for taking advantage of the little dividend aristocrat loophole there.
Yeah, no, I don't blame them. I would too if I were them. If they needed to stretch it out, why? No one says you have to do it at the beginning of the year.
And Intel's taking some rigorous notes right now.
Yeah, I love it. So let's look at the yield. Chevron's yield 3.47%. ExxonMobil's 3.14%.
So guys, 2 big oil stocks here. Obviously, oil's doing well. I don't think we'll see the 2020 shutdowns like we did for another 100 years. So oil is going to be, unfortunately or fortunately, whichever side of the fence you're on, is going to continue to be used. And I know just in Ohio, gas has been around $3.40 to $3.70 per gallon. So obviously it's higher in other parts of the country, but it's very high even for Northeast Ohioans. So they are making money hand over fist right now. And I don't see that slowing down, especially with inflation still high as the Fed tries to tame it with interest rate hikes.
Yeah, no, and I think what was interesting and what came about it, the one piece we didn't mention when we talked about the dividend increase is each one of the companies just announced massive share buyback programs to deploy this cash. Chevron announced an increase of the buyback to 75 billion. ExxonMobil announced 35 billion. These are some massive, massive dollar amounts they're going to get returned to shareholders via share repurchase. But I mean, taking a step back, it's just my perspective, and I don't know, you can agree or disagree if you want, Lanny. It is kind of frustrating seeing the large share buybacks when Exxon barely announced a dividend increase in Q4. It was only 3.4%. Look at their payout ratio. Payout ratio for Exxon's 34%. You can't tell me that a little more could have been put towards that dividend increase if they wanted. Same even with Chevron in this scenario. Only 41% payout. They could have sprinkled some of that 75 billion buyback towards a dividend increase, but instead they opted for lower dividend increases, return more cash via share buyback, reduce the share count, jack up the EPS, and then lower that payout ratio.
What it could mean is that we're in for a big Q4 dividend increase then from Exxon.
Maybe, yeah, maybe they're saving to see if it lasts, and then maybe it'll be a massive increase in 2023. That would be fantastic.
Yeah, so I guess we won't know. But Brett, I don't know, what else did you want to cover on these 2 stocks as we talk about them?
Yeah. I mean, I think you look at the metrics side by side. We don't need to read them both out there, but both are undervalued, about the same PE, great payout ratios, recent low dividend growth, but they both have great histories. They've managed to increase their dividend over 2 big shocks to the oil sector. I think the first one was in 2016, was it? And then obviously what you were talking about with the pandemic, they both still managed to keep their aristocrat status, and both yields are above 3% at a premium to the market. So, I mean, I
Both,
came into this expecting them to be very expensive, and I'm kind of shocked that they're as low as they are from a valuation standpoint.
both companies obviously have a massive positive free cash flow problems. It's a good problem to have right now. Many companies, especially retail, are dealing with cash flow problems. Hopefully Bed Bath and Beyond is calling up Exxon for a bailout right now.
Yeah, if Exxon's looking for a new storage facility for their barrels of oil, they could probably pick up Bed Bath and Beyond stores on the cheap. Maybe
Yeah,
some people buying their gas might get some 20% off coupons in the mail for it if they acquire Bed Bath.
so, but Bert, on a real note, are these any stocks that you're interested in acquiring? It's been a while since you bought oil.
It has. I mean, I own almost every oil company. I joke around about that, but it might not. What's eye-opening to me is that the valuations are lower than I thought. So this brings something interesting over the next month for me to evaluate, which is, do I consolidate some of my oil positions into Chevron and Exxon that I might be not as happy with, like Occidental Petroleum? Do I just take the gains that I've gotten from them, roll them into one of these, and make a large position in one of the two big oil? That's something that I wasn't considering before this video, but I'm going to leave with a little homework assignment for myself.
It's funny, like my oil exposure over the years has gotten lower. My wife owns Exxon, I own Shell and Total and Kinder Morgan, as well as BHP. So got a few oil, but the exposure, because I haven't really added in years, has gotten really small as a percent of the overall portfolio. So I'm going to watch these stocks. I'm not sure where exactly I like any of the two from a share price and valuation standpoint, but I'll keep watching them to see if maybe 2023, maybe they punish the oil stocks after the big surge that they've had.
Yeah, who knows? I mean, this is a good discussion just to see what's happening. It's a good sector to keep an eye on. Everyone, let us know what you think of Chevron and what you think of Exxon. Did you leave this analysis feeling differently about the companies, or are you pretty set with the oil sector? We're very curious. And also just let us know what you think about the dividend increases, the share buybacks, and what is going on in the sector as a whole.
Yeah, let us know in the comments. If you haven't already, like the video, give this a nice thumbs up, subscribe to the channel. We appreciate it. This is fun. Let us know some other stocks you're interested in, and let us know if you've been buying oil over the last few months, or you've held off on buying oil after the pandemic. So yeah, keep us posted in the comments.
Yeah, and as we always say, and I think maybe even the oil sector might be saying this to a lot of investors right now, you're either with us or you're against us.
Guys, that was Bert the Hurt and Laney from the Dividend Diplomats. Over and out.